Welcome back to Capital Finance. This is part 2 of our 18 passive income ideas you can do at home. We talk about different investments, tools, and business ideas in part 1. So now, let's talk about more investment ideas and some non-tangible passive income sources. Don't forget to give this video a thumbs up and subscribe to our channel. Number 10 on the list are dividends. Most people associate the stock market with its bewildering charts and jargon. While it is true that you may buy and sell stocks at any time the market rises, experienced investors have long utilized a different method to amass their fortunes in the market. Buffett's 5 most significant investments paid him a total of $3.8 billion in cash in 2018. He didn't gain that much money by selling his stock, but rather these 5 firms made a lot of money last year and had to split their earnings with Warren Buffett since he owns stock in them. That's what dividends are called. The stock market has 2 primary kinds of companies, public and private. Suppose a company is already mature and has a lucrative and sustainable business strategy. It has no idea what to do with its profits, so it distributes it to its investors. On the other hand, firms like Tesla, which are still striving to profit, are still in business. Even if they show a profit, the firm will need that money to expand. We'll attempt to address this question in this video. We must first comprehend a few fundamental ideas before we can proceed. Dividends, how they function, and how to prevent a dividend reduction that might wipe out your entire investment are some of the topics covered in this video. Investing has evolved since the bursting of the dot-com boom. Investors' primary goal was to invest in firms that would make a profit and divide this profit with them, as they are entitled to the company's earnings as shareholders. On the other hand, entrepreneurs like Jeff Bezos jumped in and fundamentally altered the environment. A more critical objective than increasing shareholder value was to develop the business, even if it meant not paying any dividends to shareholders. It may seem that a firm losing money and burning cash is a terrible business, but the goal is to operate at a loss until you control the whole industry and can turn a profit as Amazon has done over the last 25 years. There was no dividend paid to shareholders despite its $1.6 trillion market value. Because it was making a loss, it avoided paying taxes for almost 2 decades. On the other hand, Walmart produced $15.2 billion in net income and paid out $2.16 per share in dividends in 2019. However, Walmart was valued at a third of Amazon's worth by the end of the day. Walmart seems to be a better choice if you're looking for passive income rather than investing in Amazon, which may appear more promising in the future. The stock market is full of instances like this. Just a few technology businesses pay dividends. The remainder, particularly the larger ones, would prefer to reinvest their profits rather than distribute them to shareholders. Although dividend-paying stocks are enticing, they aren't always the most excellent choice. As a matter of fact, dividends may be utilized to defraud investors. If the stock is close to bankruptcy or barely surviving, it isn't easy to tell. Each year, the company's stock price has been decreasing. For example, hefty dividends paid by a company might entice investors to its shares. A 7% dividend yield can be seen in the company's financial statements. That's out of this world. The whole market is unlikely to have anything like that. Even the world's biggest corporation, Apple, pays dividends of roughly 2%, yet I would not invest in this company and would not recommend anybody else to do so. 5 years ago, there was a $50 stock price and you could expect it to have risen at least marginally since then. There was a drop in the price to $45 and the firm seems to have no future. Therefore, it pays a hefty dividend to maintain its shares, appealing since who knows where the stock price will be a few years from now. Compared to Apple, whose dividends are just 2% but whose stock price climbed by 337% in the same period, a steady stream of income is fantastic, but the stock market is full of investors who have suffered principal losses. For this reason, don't purchase companies based exclusively on their dividend yield. Is there a decent company out there that is expanding and pays enormous dividends simultaneously? Got an idea of how different dividends work yet? Great! Now you can start to invest in dividends, but make sure to do thorough research on this. Now, let's talk about royalties. Royalties are the second most important thing. As far back as 1999, Jeff Bezos was the first to submit a patent on the concept of one-click purchasing. Customers may utilize previously used and stored payment information to purchase using this method. Suppose you don't have the time or inclination to manually enter your payment and shipping information each time you want to buy anything. In that case, you may utilize one-click purchasing by entering a predefined address and a credit card number. Instead of entering your credit card information each time you buy an app from the App Store, you simply double-click the Site button and the software will automatically use your saved credit card. Until 2017, Apple and every other company that used this technique paid a small royalty to Jeff Bezos for using his innovative technology. Although it may seem absurd, this is how the world works. A 20-year patent is awarded to the inventor of a new product or service to encourage innovation. No one else is permitted to use your invention except you and those you grant permission to. If you want to make money from your idea, you can either sell its rights or license it to others for a modest price each time they use it. This is how Jeff Bezos made billions, one of the most refined concepts ever. However, it's not simple to design a practical technology for it. That's why firms, particularly in the United States, register for hundreds of patents every year, even if they don't need them. If someone else uses that technology, they'll have to pay a royalty. Another type of investment is mutual funds. There are two kinds of money troubles. The first scenario is the most common when you don't have enough of it. The second is when you have too much money and have to handle it. I'm sure we've all experienced that. Inflation will eat away at it if you store it beneath your mattress. It's not a brilliant idea. Money is also not a good idea to leave it in a savings account since the interest rate on such accounts is so low. However, mutual funds are also a possibility. There is no such thing as an index fund in mutual funds. On the other hand, mutual funds examine the market and strive to outperform an index like the S&P 500 by at least a tiny margin. Assuming you had $10 billion to invest, you can make a substantial effect by making a 1% change. In other words, if you had a choice between 2 or 3% higher, you may make an additional $20 million to $30 million. That is why the wealthy prefer to retain most of their assets in mutual funds, where they can sit back and watch the value develop. On number 13, we have the most common idea of all, business. As a Dragon's Den fan, you know that the Dragons are constantly attempting to purchase shares in valued firms, particularly those with the most significant potential for success. Investing in a successful company is the most acceptable decision you'll ever make. Unlike other assets, a company produces something regularly, whether a service or a product. Businesses continually enhance or develop new items to keep ahead of their competition. To keep your money increasing and produce a steady flow of income, you need to invest in a worthwhile company. Of course, most people can't afford to buy a piece of multi-billion-dollar company. Still, the financial system we've built over the centuries has made it possible for almost anybody to own a little piece of any multi-billion-dollar company by investing in the stock market. Next on the list is real estate. This is the most people's preferred type of financial asset. The fact that you can touch, feel, and even satisfy one of our most fundamental human wants is not a coincidence. Shelter is a need, which implies there will always be a demand. The finest source of passive income you may have been via rental property. It's not that you don't have to work hard and spend money, but it's controllable to some extent. The quality of a piece of real estate is determined by its location. If you don't put it in the right spot, it might become an enormous liability that you won't be able to rent it out but still have to pay the bills. If you've ever met someone who has inherited an old home but has no interest in living there since it isn't in a desirable location, you'll know it may be difficult. There are certain places that are so popular that they may be rented even if they aren't in the most pleasing shape. At number 15, we have online goods. You know what's better than real estate, don't you? Internet goods such as music. Music is really tough to create. For some artists, it may take months to years to compose and arrange. It may, however, be a long-term source of revenue. Take Eminem, for instance. He's been at the top of the music business for the last 2 decades. Even though he published his first album, I Am Not Frightened, in 2010, many people across the globe are still listening to it today. Mariah Carey's All I Want for Christmas Is You was released in 1994, yet she still receives $2.4 million every year as her song is one of the most played Christmas songs during the Christmas season worldwide. Additionally, new revenue sources for musicians have opened up with the arrival of services like Spotify and Apple Music. In addition, you aren't confined to only music. More and more people purchase online items like tutorials and presets and applications and software to improve their photography skills. Next on the list is placing ads on your car. Putting adverts on your automobile may sound like a joke, but it's actually a great method to generate money. The number of ad-based options to generate money nowadays is astounding. What a time it is to be alive! If you're already driving your car to work, dropping your kids off at school, or shopping at the hypermarket, why not make some money while you're doing it? I understand that adding advertisements to your car may make you feel a little self-conscious, but who cares? You might anticipate a monthly salary ranging from $150 to $400. If you have a vehicle loan, this will help you pay it off, but beware of scammers. This sector is full of them. As soon as you locate a firm that will place adverts on your automobile, you can put it out of your mind and focus on making money from driving your vehicle instead. Number 17 is you guess it right, your talents or skills. There are many different types of assets and they don't all have to be tangible. Having that is constantly in demand, even if it requires part of your time, is a steady source of money, even if it isn't an occupation in the classic sense. Take a look at cardiologist as an example. It's a difficult talent to master without years of formal instruction and experience. On the other hand, the lack of rivalry implies that you may charge a higher price for your service since there is less competition. Because of their high salaries, many surgeons are multimillionaires. The same holds for professions like law, medicine, and so forth. As a result of the growth of the internet, self-teaching is becoming more critical for skills like coding, online commerce, and computer languages. In the earliest stages of wealth growth, this is a great choice. A better long-term investment than the stock market could be to focus on improving your current talents rather than investing money you don't have. Last but not least, ties and connections. While it may not seem valuable, it may be more beneficial than you realize. When brilliant individuals from diverse walks of life join, incredible things may happen. There's no better way to start a new company than knowing the appropriate individuals to turn to. In reality, that person's guidance might spare you years, if not decades, of trial and error. Try utilizing digital tools like LinkedIn or other social media platforms to network, as we live in a society where people are socially distant. Visit our website and email me if you'd like to get in touch. Even though this list might be much more extensive, I only included the ones that I consider to be the most significant. Take care of your friends and be friendly to strangers. Who knows, they might be the person you need in times of desperation. These are all the 18 passive income ideas we've compiled for you. We hope that you learned a lot from this episode and realized the importance of having multiple passive income sources. Again, if you like this video, please give it a thumbs up. And in the comments below, let us know which financial topic you want us to do next. Subscribe and click the bell button to keep up with the latest content. See you in the next video.